You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that funky tune. I love that tune. That's a great way to wrap up our broadcast week here with that funky tune. Welcome to This Week in Futures Options, the show, as the name implies, that breaks down all of the funky, fascinating, and exciting activity. Lighten up the world of futures options this week. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-exciting Options Insider Radio Network. Quite a plethora of programs available for your listening pleasure. Of course, you can dive deep into the archives of this fine program, TWIFO. You can also get, maybe you want some business news with a slash of nonsense. Well, then the business show just went live recently, back again on the network, back again to violate your eardrums with all sorts of crazy nonsense. Or, of course, the Option Block, Vol Views, Advisors Option, all the fun programs you guys have come to know and love here on the network. And the easiest place to find all of it in one place, theoptionsinsider.com. We're working on building the live in there for you too, listeners, so you can go over there and see right away when we're live on the air and just click on the button to stream it, make it a little easier for you. Right now, of course, if you do want to stream live, TWIFO, it is every Friday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR, and we'd love to see you guys in there. If you can indeed join us, you can ask questions, you can share pearls of wisdom, you can make fun of Nick, all sorts of good stuff you can do here if you listen live. And of course, if you listen after the fact, if you can't join us on Friday, and we know a lot of you can't, but a lot of you like to tune in after the fact, we welcome you guys too. You guys are always welcome here on the program as well. You can always find the show on demand, like I said, on our website or iTunes, TuneIn, Stitcher, or via our mobile app, which is available, of course, via all of the major app stores out there, including the Amazon App Store. So if you're one of the 3 out there Amazon users in the audience, hey, we got a version for you. And of course, while you're listening, while you're streaming, however you're getting access to the program, planes, trains, automobiles, working out, whatever you're doing, make sure you stop and send us your questions, your comments, your insights, your pearls of wisdom. We love to hear from you guys. Hit us up via all those platforms I just mentioned. It's all baked into the mobile app as well. So if you can't remember our various social media handles or emails, don't worry. We got you covered. Just click on those buttons, and your thoughts can make their way over to us. And when I say us, it's not just me on the old show. No, I'm also joined by my cohort, my partner in crime, the man who did a nice guest stint on Trading Tech Talk earlier in the week, and now he's back for his own program, Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to use a lot around here called Quick Strike. Nick, welcome back to This Week in Futures Options.
Hey, good to be back this Friday afternoon. It's a tough one to accommodate in the summer, but we're making the best of it, and I seem to be all over the place these days, but I am glad to be here.
Yeah, your travel schedule has been a little loopy with the show, and ironically, you are in Chicago. You're just a stone's throw away here from the studios, but you are beaming in remotely from undisclosed locations here in Chicago for reasons we shan't get into here on the program. It'll take far too long. We wanted to have Nick in studio. It didn't really work out, but we'll have him back in studio again. In the meantime, though, it sounds like his Wi-Fi is holding up there. So let's dive right on into the program before it decides to think better of that idea. Let's move on to our first category, our first victim on the old program. I think, Nick, we'll start in your neck of the woods because I know you spent a lot of time over there in the Eurodollar pits over there on the CME, and it's a product I always watched from a distance. I was always over there on the SIBO. Obviously, I never had a chance to really wade into those crazy waters, and certainly in that time frame, late 90s, early aughts, Eurodollar pit was rocking and rolling. It was a crazy place to be. So interesting stuff out there. So let's start in your old stomping grounds, Nick, and talk some Eurodollars. Actually, before we do that, remind all our listeners, if you want to follow along, you can do just that. Not just with streaming live, of course, but also generate your own reports. Don't just take our word for it. Go do it yourselves over there for free. CMEgroup.com/quickstrike. If you ask, how come we're always sending people to CME Group? Well, Nick's a tool partner over there, and so he works a lot with them. And we work a lot with CME, and it makes sense to send you all to one place, which is CMEgroup.com/TWIO. This week in options, and you can have fun, kick the tires, do it all for free, generate all these reports we're talking about here, skew, changes in implied vol, open interest, moves, volume spikes, crazy trades, all this stuff. It's all there in the report for you. So really cool stuff. Check it out if you are so inclined. And I'm guessing if you're listening, you probably are so inclined. All right, Mr. Nick, let's kick it off here in your neck of the woods. I've talked long enough, sir. What's cooking in your old stomping grounds of the Eurodollars?
Well, I did a lot of my reconnaissance yesterday after the close to see what was going on, and if you notice, most of the move that happened in the product happened today after the non-farm numbers came out, and things were a little bit stronger, and a little some revisions that that basically put the ball back in the Fed's court to potentially look at doing something coming up here in the next meeting or two. So markets down, 7.5, 8.5, maybe 10.5 to 12 ticks across the board here in the product itself. But I don't think that changes some of the interesting things that we did see even prior to today. I mean, I think everybody sort of expected that if there was any strength in the number that we would see the Eurodollars and the Treasury products down, and we saw that pretty much. I was watching Bloomberg TV when the numbers came out, and you immediately saw a spike in the yields. Yields up, futures down, right, vice versa, and then it pretty much held steady from there. So the numbers came in, some parts stronger than expected, and I think the rate itself went up 0.1%. But some of the again, and I'm going to encourage people, and you did as well. One thing to keep in mind, because we do this show on a Friday afternoon, if you are listening to the show and you're listening on Mixler, I actually listened to the Mixler version of it last week, and when I was doing some work in the office, and it's basically like it's us talking right now. But that report on the CME Group website, it will not change from now until Sunday. Now, what will change is the open interest, but the volume numbers and the volatilities and that kind of thing more than likely are going to be pretty close to what we're talking about right now, because we are doing updates throughout the day. So be sure to go over there and take a look and make sure that you're watching or you're looking at the report as we're talking. But some of the things of note is sort of the decrease in open interest in some of the front contracts. The August and the September came down a little bit in OI and rolled some of that into the October contract. And again, that could be as people who are trading the product start to look to where the Fed is going to start to act. Okay, so saw a lot of that happening and some change in open interest on the 99.125. We're going to call those the 91 puts in the front contract. So, and the same thing in the 92 puts in the September contract. So a lot of puts trading. The ratios are pretty skewed to the puts in the first couple contracts, and generally across the board here in the higher open interest expirations. I think that we had a pretty decent sized put call ratio in the June 17 contract. And I find this pretty interesting because if you look on the report for the volume for the week, it was almost 14, the put call ratio. So 14 times the puts traded in comparison to everything else. And you look in the big leader there is the 98.75 put, or the 87 put as we call it. Remember, we take the first digit to the left of the decimal point and the first digit to the right, and we call that the 87 put. So, just looks like a general rolling in the market in terms of people rolling out a little bit further. Some big action out in the June 17. Not much change in open interest here in the whites. In the whites as the front part of the curve, and that's going to be where most of the action is when there's sort of a near-term Fed decision in place. So, keep an eye on, what you're going to see now is you're going to see this little rangy trade here as people, you're going to see that in the Eurodollars and the Treasuries as that expectation goes one way or another. You're going to see it either be red or green, depending on what the consensus is or what people think is going to happen in the rates.
Let's move on to as the sirens come for Nick, as the police have found your secret location, sir. Your undisclosed location has been disclosed at last. So while Nick runs and hides from the police, let's dive on into the sticky stuff, the Texas tea. Let's kick off in crude here. Of course, crude has been pretty active yet again. We focus a lot here on WTI, but all the crude products pretty much across the board have been rocking and rolling. We were talking a lot on recent shows, Nick, about how it seemed like that 40 handle, particularly in WTI, was just like that magic number, that magic level. And there was a lot of paper lining up there. There was a lot of paper lining up south of that in terms of puts out there in WTI. In fact, if you pull up the skew chart out there, it's going to be pretty much, at least it was for the lion's share of the last couple of weeks, all puts all the time. The calls had started to get some life to them. But we're still seeing a relative interesting shape out there in terms of what's going on in the skew. Before we even get more into that, let's break down the actual volume that we saw out here today, or I should say really this week. And it was an interesting week to watch crude because we did see that, that kind of brief flirtation south of the 40 handle and then right back up to a little bit north of WTI. We're vacillating around in the low 40s as we are recording this and streaming it live, of course, Friday, August 5th here, listeners, for all of you playing along with the home game. And this week, again, it was kind of still front month where the action was. September, about 60% of the contracts are about 533,000. Again, WTI lighting it up, about coming in that front month portion. The strike, the option du jour, was again in that front month with the SEP 35 puts leading the charge pretty aggressively, nearly 50,000 of those contracts. I said about 500,000 going up in that front month, about 50, nearly 10% of that coming in those one trade here, or not one trade, one strike on the SEP 35 puts. In terms of how they actually traded fairly evenly throughout the week. There wasn't like 30,000 going up one day and then a trickle the rest of the week. It was pretty even and pretty active throughout the week, indicating there was a lot of back and forth on that SEP 35 strike. And if you dig a little bit deeper, a little bit beyond that leading contract, SEP 45 calls and 40 puts were also active. 40 puts, probably not a surprise. That's kind of that mythical, magical strike we were talking about earlier. They both did about 38 to 39,000 contracts each. The SEP 45 calls, also interesting, again, perhaps reflecting a little bit of near-term interest, and perhaps we're going to rebound off the 40 handle, which, of course, we did out there. Interesting stuff out there from a skew perspective as well. We have seen pretty much, as you might expect, with a little bit of retracement to the upside. We saw kind of the calls coming down and the puts coming up, so skew getting a little bit richer out there in good old WTI land. You can dive into that a lot more yourself, listeners, if you activate that quick skew function over there on the Quick Strike platform. It's really cool. I was playing around with it before the show. Actually, I was almost a little late dialing into the show because I was just digging away at the quick skew, and it really does show you where the call wings are and also the put wing. If you know anything about skew, it's kind of hard just to, let's say you throw out the skew index number for the S&P. Well, what does that really mean? A 128? Does that mean the puts are rich? Does it mean the calls are cheap? Maybe a little bit of both. With something like a quick skew tool, it's really kind of provides a little bit more nuance. And it's something, quite frankly, I haven't seen before in any other platform. And we use quite a few platforms out here. That's one of the reasons why I wanted to bring Nick on the show, because they make some cool stuff over there in Quick Strike / Bantix land. Nick, I've been talking a lot here about crude, but it has been an interesting week. And I know if the police haven't hauled you away yet, what caught your eye out here in this back and forth 40 action out here in crude this week?
Yeah, no, I like listening to you talk. It's good, and I'm just waiting my turn as always. But the interesting thing here, I think, again, I did a lot of the research going on yesterday, and what happened today probably supports much of what I saw yesterday. You mentioned we flirted with in the 39.40 range earlier in the week. I think Wednesday was the day when we finally broke that barrier. So what I wanted to take a look and see what kind of happened around the 40 strike and below the 40 strike. And one thing that we were adding to some of the reports, and again, to clarify why we throw you over to the free stuff over on CME Group, we want you to go over there because we put a lot of good stuff out there, and we want you to start there first. And if you find that you need something else, then come talk to us about the other stuff. But we feel like there's a lot of good things over there, so we want to make sure that you see what's available and see what you can use and determine whether you need more, and then give us a call. But so one thing I did notice that came in yesterday was the 35 strike on the downside slightly overtook the 40 strike from an open interest standpoint. And what open interest profile tool is, we're now shading what we're calling the barrier options. And I know our option barriers, probably should say option barriers because there's a type of option called barrier options. But we shaded the option barriers, which are the high OI puts and the high OI calls, because a lot of people, and there are reports, and this happens a lot in the equity market. So we figured, you know what, we'll give it a try. We'll take a look and see what you think in the futures market. There are a lot of people that will trade that high OI put, high OI call. On the front month, we opened up that range a little bit where the 35 put became a little bit higher in open interest than the 40. We closed that back up. The 40's back up as the high open interest. And you would expect that, I think, now at this point, since we've traded around it for a while, traded through it and then traded back around it. So, it looks like we have a 40 to 50 in terms of a price range, maybe even a 40 to 45, given that the 45 strike is starting to get a lot of open interest as well. And I reiterate this every week, but for me, the interesting thing is looking at the ratios. And we're going to start doing more stuff with the ratios that trade and how skew's changing and stuff like that, and try to match them up to see if we can get some sort of correlation with those as well. So the report, when you go out there and take a look at it, the put call ratio and the volume for the week, at least so far through today, is 1. So, there was as much trade in the calls as there was in the puts. So I think that's always, like we talk about, it's always interesting to see that, just to get an idea of what people are thinking. And even through that break, it was still sort of the same thing. So I think people thought we could go low, but I don't think anybody thought we could go really low. I don't think anybody thinks we're going to see the levels that we saw before. But I like right now, just given, if I just use purely the open interest numbers as as a trade. I think, 35 is probably a pretty good support on the downside, but I'm even saying the 40 is a good support now that we tested it. You go through it a half a buck. It's not, how is that really considered going through it? But 40 to 45, 40 to 50 looks like the range right now, and the option trade is supporting that. And the other big thing here on the crude is just, a really big jump in the open interest, 8% just in the 8% just in the first 4 months, change in open interest up over 2.2 million. Big jump in the October contract, okay, with big jumps even in the 12-day contract, which is September. So a lot of good trade there. And typically you're going to see the June and the December contracts have most of the open interest in the options. And the December didn't move up that much, but we saw a lot of the big jumps in open interest in the shorter dated contracts. So 35 puts, like Mark mentioned, also the 40 puts. So it looked like there were some people rolling the 40 down to the 35 earlier in the week. I think some people took some profit on the.
Looks like Nick's undisclosed location is not playing well with our. We'll get Nick re-upped here. I think the police have caught up to him. But yeah, his undisclosed location is you're in a hole in the ground somewhere. It doesn't really work. Not suitable, not conducive to good Wi-Fi connectivity. But we'll get him back here on the program forthwith. Meanwhile, let's check back. Mr. Howard, have you survived the bombardment there in your undisclosed location? Are you back, sir?
Police are at the door, so I don't know what's going on. So how much of that did you?
We got most of it. It was a little choppy towards the end, but to kind of just pick up right where you left off.
The upshot of it is pretty equal trade in the puts and calls. Again, just looking purely from a numeric standpoint and not really being active in the market as a trader. I think. Given the open interest levels and how the trade was this week, the 40 looks like a pretty good support level. It's probably maybe obvious to a lot of people, but 35 being, I think, as low as we're going to see if there's any more negative news in that market, with a lot of trade between the 40 and 45 and maybe a high side of the 50 for now. So again, it's probably worthwhile looking to see if there's any kind of strangles or different kind of 1x2s that might be worth taking a look at in those particular strikes. And again, I'll encourage you. I said it, and again, this is by no means meant. This is more to get you out to the free tool so you can see what's available. Go take a look at the open interest profile tool as well as this week in options, because I think you're going to see a lot of good stuff there. We've added. Or there will be some new things that are rolling out Tuesday night, I think, that you'll find real interesting in terms of marking the high open interest stuff. You could see it anyway. We actually mark it on a chart now and then showing what a lot of people call the max pain report. So it kind of gives an indication of, based on where all the premium is, where theoretically where people think that the market's going to get pushed toward what strike. So I encourage you to take a look at that stuff in the coming weeks.
Max Payne, great game, not so great movie, as I recall the adaptation with, I believe it was Mark Wahlberg. I think there's a lot of pain from watching that film. But as we move on to another product that's been on our radar quite a bit of late, we're going back to the beans. Are they indeed the magical fruit of yore? Well, it was a pretty active week yet again out there. The future's moving off about 30 for the week out there, so that's a pretty decent move, all things considered. About 3% or so, depending on where you're looking out there on the term structure. So we were just joking with Beans the other day on one of our other programs. Maybe they had settled down. Well, apparently not. Beans back in action, and not surprisingly, a little bit of a different story out there when you're talking bean options volume, because they have that whole new crop, old crop, and all the other fun stuff that goes on out there in the ags. It makes them a little bit different, so you don't see that massive aggregation, that massive congregation of paper in the front month. It's actually farther out, this time in November, and that's been kind of the leading month for quite some time. About 73% of the overall paper, which was about nearly 300,000 contracts this week. So pretty decent-sized paper, even though open interest was about unched this week. The volume was still pretty strong. And of that, it was the 1,100 calls out there in November that were leading the charge with about 35,000 contracts. That's another interesting one. It was pretty active earlier in the week, then it seemed to kind of really settle off quite a bit, doing about 16,000 contracts on Monday alone, and nearly another 10,000 on Tuesday. Then it kind of settled off, whimpered out the rest of the week with about 4,000 each, and today he's only done a couple of thousand contracts. So the lion's share of that trade coming back on Monday, which is kind of interesting. And then you start dissecting some of the other strikes, and Not a lot else really even close. That's kind of where the action was. Also, some action out there from a skew perspective out there, Nick, which is kind of interesting. And if you recall from our earlier episodes, listeners, talking about not quick strike, but talking about the skew in soybeans, it was a hefty premium to the calls, not so much to the puts, and that was a very favorable setup for long futures traders who maybe wanted to collar or get some cheap protection or get some decent premium for overriding to the upside, or vice versa, or anywhere you wanted to go out there selling upside, buying downside. It was a pretty decent configuration for that. We saw that skew coming off pretty aggressively today, or this week I should say, about a couple of vol points almost across the board. And it seems like, Nick, I haven't had a chance to dive fully into all the quick skew parameters out here, but it seems like a lot of that was coming off in the near term on the calls, where of course the volatility premium is the richest. It seems like particularly, and you guys measure via the quick skew a little bit farther out of the money. So you're talking the far wings, more of a 30 delta risk reversal rather than your traditional 50 delta, which would bring you a little bit closer to the at the money. And that's where we saw a lot of the change, actually, particularly in that front month SEP period, where we saw that kind of that farther out of the money type risk reversal. The call wing particularly really coming in aggressively, and not surprisingly, perhaps that contributing a lot to that vol skew implosion, perhaps you can call it, that we saw going on here this week. Now, Nick, what are your thoughts here? I know you like to watch the beans. You're like me. You kind of, after having done the show for a while, you're becoming more of a devotee of all things soybeans. So what caught your eye out there this week?
Yeah, that was definitely the case with me as well. Vol was down. The market was down, and that was earlier in the week. So we were pretty steady from Tuesday afternoon all the way through the end of the week. So that big move really was early on. So absolutely vol in quite a bit, and that's on the 20-day, the 50-day, and the 80-day contract. So that's and again, we talk about it all the time. When you start trading back within the range, or you're at the top of a range and you go back down to the bottom, and that's kind of what we're seeing here. You know, you're gonna get premium coming in a little bit, and you're right. The skew on the you mentioned a 30 delta risk reversal, and we have the 50 delta risk reversal on the report. It is the calls getting a little bit cheaper. The puts getting a little bit richer, but the calls primarily getting a little bit cheaper. So there's not quite that fear that there was, and it was quite wide at one point in time where it was. I go back here and look. If we go back to the beginning of July. We had the calls, the 25 delta calls, 10% rich to the at the money, and the puts were 10% cheap to the at the money. So we've gotten to the point now where the 15 delta and the 25 delta puts are pretty much flat to at the money volatility. So just in your head, think about what that vol curve looks like, and we've seen the calls sort of go up during that period of time, but they are starting to come back down and get more in line with the at the money. There's still a premium to them, but they're not quite the premium that they had before. So I think a lot of it is some downside in the call volatility with the puts catching up again. So that was those are the big things, and that's why we color the numbers on the report, right? If you see a lot of red going on, then it means typically the strike's changing one way, or on the downside, the futures are changing, got the volatility changing, and the skew. So you see all that happening in the first four columns of the report. And as you mentioned, it was a pretty flat from an open interest standpoint. And you mentioned the 1,100 calls in November, and this week it looks like people were closing some of that position as well in that contract. So it could be that the party's over for that amount of upside there out in the new crop options. And again, like I always try to do, we didn't see much of a change in the put call ratio from an open interest standpoint. That's not surprising. At this point, you're going to have to see massive trade one way or another in order to move that open interest one way or another. But the put call ratio on the trade itself and the volume for this week is definitely favoring the calls to the puts. So, could be closing, could be some rolling, that type of thing. But big thing in the beans, off early, back in the middle of a range. Vol's going to come off. Skew's going to sort of get back to normal again. So it looks like we might be approaching sort of some sort of equilibrium here in this market again.
All right, let's take it home here before we get some of your questions with the shiny stuff. You guys love your gold. You can't go a week without having given you your gold check-in. We've done a little bit of mixing up. We've done some silver in the past. We did copper not that long ago as well. Not too shiny, but someone out there wanted some copper love. Going back to gold this week, because it still is where a lot of the action. A lot of people were expecting, I think, Nick, perhaps a little bit more of a move than we got out of gold, given the big non-farms this week. Again, like you said at the top of the show, non-farms kind of surprising to the upside for the second month in a row. What that means for rates, what that means for gold, what that means for everything going forward, kind of up in the air at this point. We're in this weird scenario where we're seeing across the globe, really, we're seeing easing pretty much everywhere, and here in the States we're putting up these record numbers. So it's kind of a weird scenario we're in, and of course gold caught in the middle of all that. It finished the week off about 20 handles out there, right around the 1335 or so level, depending again on where you're looking out there. And again, these are the big COMEX gold options. You'll see different paper, maybe different stuff if you're looking at GLD, but the relative tenor and volatility skew and things should be the same, because there is a big arb between those two. Again, and this week I should say, again, a lot of the action, most of the action, nearly half, coming right there in the SEP month, with about 46% of the nearly 100,000 contracts that went up out there going up in September. Leading the charge, the 1,400 calls, with about 5,500 of those going up, about half of which traded on Tuesday, which is kind of interesting. You think you might get a nice spike coming in today along those lines. In fact, let's see how these are doing today via the old quick strike report. About 1,100 going up today. So not a bad number overall, but not as strong as Tuesday, with about 2,500, about half, like I said, going up in that one big chunk there on Tuesday. We talked a lot about gold skew over the last few months, about the last month or so, ever since post-Brexit. There was that huge flight into gold calls, and it kind of eased out, and the puts were leading the charge, and it kind of got a little bit of equilibrium. We're kind of hovering still in that equilibrium mode right now. We're looking at the skew chart here via quick strike right now, listeners, and it is interesting. The calls are still, I guess you can see where the action is, but the puts are by no means falling off as well. In fact, this week compared to last week, skew is pretty much unched across the board, which is interesting in and of itself. You don't see that scenario very often out here. Usually, skew is going somewhere in gold, Nick, and this week, not so much. I know you've been busy in your undisclosed location. But you got any thoughts on gold before we turn it over to our listeners really quick?
I love it. I love the undisclosed location. Yeah, I wish I was there, actually, because I know you had a beer ready for me. We were going to do the show. I was going to have a beer.
I had to drink it myself. It's the duty. It's the things I have to pay. The duties I have to bear to do this show, Nick. To drink your beer for you. I did have one at lunch, just to be thinking about you, because I wanted to make sure that I was on the same page as you as well. But what do we see over here? Again, a lot of the decline, or much of the decline, came today after the number. Okay, so not so much fear. Economy is clearly doing okay by the numbers, and that seems, you hear a lot of candidate, or hear a candidate talking about how the economy is not doing so well, but by the numbers purely, it looks like it's all right. So there was not so much a flight, but a release of that gold, so people weren't so concerned about it. But yeah, pretty steady from a volatility standpoint. And the interesting thing about the quick skew, when you look at that chart, you're starting to see, as you mentioned, the skew was pretty flat with the premium to the calls just a little bit, not very much, but you're getting more of a normal smile again in the gold. So it's not tilted. It's not a crooked smile one way or another, meaning, there's a bias to the downside, to the upside, but we see a little bit more normal curve that's being displayed and I'm going to look at it right now. Yeah, I mean, we have a pretty decent looking smile in all of these expirations. And if I go through and look at everything for the month, for the first four expirations, yeah, it looks like the puts and calls are just sort of balanced. So that's a big thing here. Again, we talk about it, and you can think and utilize these different things in your trading. The curve looks a little bit more normal, so that means there's a little bit more balanced trade. You see that a little bit. It was a little bit of a call bias here based on the volume this week. The bias is still to the calls on the open interest side,
But, if we continue to kind of trade in this range and keep the skew sort of balanced, we might see some of this. We might see it tilt back to just kind of 1.0 across the board, where puts and calls are both in fashion until, again, we start to see what happens with the Fed and what they're going to do, and just the numbers in general for us, the U.S., and for what's going on abroad. So nothing really stupendously outstanding there. I mean, there were some upside trades in the calls from 1,400 up to the 1,500, but nothing really eye-catching on the downside. So I think people still feel it still looks like a bias towards a move up, but at the same time, just looking at the curve and it coming back, there's not a real flight to get that upside like there was in the past.
No, you're right. And I'm looking here, just I was live tweeting for some of our listeners here about gold, and apparently if you use the hashtag gold right now, the Olympics have hijacked that completely because they filled my our Twitter timeline with all sorts of gold medal icons. So apparently don't use hashtag gold for a while unless you're talking the Olympics. But of course we're talking to you guys. It's time for you guys to take the reins here and give us some futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback segment. Like the man said, this is the portion of the show where you guys get to take over inmates running the asylum, or perhaps it's the other way around. Who knows? Maybe when Nicker and I are talking, that's when the inmates are in charge. Either way, depends on how many beers we've had before the show. It is a Friday show, after all. All right, Nick, let's see how many we can blast away here on the program before your undisclosed location is indeed disclosed. Let's get, first off, this comes from Gin George. He asked a question you and I have actually kind of asked ourselves a lot here on the program. I'm not sure if we really have an answer, but maybe it's worth discussing again. He asks, why no volume in WTI weekly options? And, this is something that you and I have kind of debated, discussed here on the show a few times, Nick. In fact, as we're talking here, I'm going to try to pull up the weeklies here in WTI. Maybe you'll beat me to it. This is your platform after all, but I'm going to see if I could race you to it here as I'm looking at the weeklies. But yeah, not a lot of activity pretty much at all this week, which is, again, it's frustrating and a bit curious because we have seen so much activity in the weeklies in other products, including a lot of the equities and index options. They've been a huge hit. We've seen people even in big index products like the SPY adding more weeklies because they can't get enough of them out there in SPX, which is an institutional product typically. So interesting that we haven't seen, for whatever reason, that spillover into WTI. I don't know. Your thoughts, Nick? What do you think? Why is nobody playing in the weeklies in WTI?
Well, I think I need to talk to my buddy Jeff White over there at the CME because he did have a good answer for me at one point, and I don't recall 100% what he said. So I'm going to have to ask that question again, and then I'll have a better answer the next time. But I think part of it is that they try to enlist market makers to put out bid ask for that stuff, and I just don't think people are all that interested because it's sort of a vicious circle. There's no trade, so they don't want to make the market so tight, so there's no trade. So until there's more guys out there who are willing to put the numbers out there and tighten the spreads, I think we're going to see it sort of lag a little bit. I know they would love them to be there, and I think what an interesting thing to watch for next week, Mark, though, to even ponder this even further, is the September contract's got 12 days right now. Okay, so we're going to lose Saturday, Sunday. So by Monday, we'll have 9 days. And you're going to see there's going to be massive volume in the September contract next week. And we're not going to see, and it's no different than what the week 2 contract is right now. So that's a good question. We ask it all the time. The same thing could be asked for the gold as well. It just seems to be that it's not quite there yet with market makers, which is going to make the markets not quite as tight, which is going to make the trade not quite as active. But I do believe that that's going to come around because there's talk like that. I don't know if anybody realizes this, but you can also see it in Quick Strike when you do log into the free CME reports out there. There's also a daily WTI contract that's out there. And there's not much going on there in terms of volume either, but they do have a daily and these weekly. So you really can pretty much trade anything that's going on today and pretty much anything within 7, 14, 21 day period. And then whatever the calendar happens to be that's sticking in between those weeklies at the time. So I'll do some further investigation. I promised that I would look at the spreads to see what those look like in comparison to the other regular options. I haven't had a chance to do that, but we'll get some answers for the crowd because I'm always curious and asking the same question every week.
All right, good question, Gin George. maybe we'll get to the bottom of that for you. It could be a use case issue too. Different products have different users, but products like WTI have kind of really spilled over to the masses now. There is a big retail flow out there, so it's not so much where there's just a handful of only producers or something else using it like there are in some other commodity products. But there might still be some of that legacy issue as well. It's interesting the way that some of these different products shape up via their term structure and the way people like to use them, and it's sometimes old habits die hard. Let's go on. Question from Mickey Vale. He writes, do you guys look at E-mini option skew? How does it stack up to SPY and SPX skew? We don't hit on a lot of E-mini or the big futures option stuff here on the show, Nick, just because I talk a lot, certainly a lot. We talk a lot on the network about that stuff and a lot of other programs. So I like to come on here and talk about things I don't get to talk about all week, like soybeans and crude and all that kind of other fun stuff, and maybe silver, all kinds of weird stuff, copper. So that's kind of fun for me. But that said, we do look at it a lot. In fact, I'm looking at it right now here via the Quick Strike platform, and these products do trade in a very symbiotic way. The notion that there could be some sort of weirdly aberrant skew in the E-mini that was not reflected in the SPX or the big, options over there at CME or SPY, that stuff's going to get arbed away. So it's not really going to exist. That said, I used to be out in the SPX for a while, and we'd go arb back and forth with the options pit at the CME. That was still in the infancy of the E-mini. It wasn't as big, clearly, as it is now. So we didn't see as much of the E-minis looking that way. But you might see little aberrant moments where a trade will go up in one product versus the other. Maybe someone's buying, July or say, 3 month out of the money puts in one pit or in one area that they're not doing in the other. So you might see little aberrations in the months that way. But if things get crazy out of line and people are just bidding them up all the time in the S&P E-mini, then guess what they're going to do? Someone's going to come in and arb that in the SPX or SPY or a bunch of the other products as well. So you're not going to see it last that long if things get crazy out of whack. But in general, they're going to be pretty much in line because these things are otherwise there's a big arb opportunity between them, and someone out there with a lot of capital and a lot of computing power is going to dive into it pretty quickly. I don't know, Mr. Nick, anything? You're not really an S&P guy, but any thoughts here for Mickey Vale?
Well, I mean, you could speak to the SPX part of that better than I can, but I think we don't talk too much about the skew because it doesn't change that much, right? Because it always is really negative to the downside. So the puts are always bid and the calls are always offered. And I think, and I've been trying to read and look and pay attention and watch there, and it's because what you're going to get a lot of put buyers who are hedging a portfolio or a position in the equity market that way. So those are going to get bid up. And then you have a lot of people doing covered calls. So people are own something and they're going to be selling the upside. So you're going to see where the puts are always bid and the calls are always offered. So it's not really fun to talk about and not too exciting because it always seems to be negative. And it stays generally pretty negative, and you'll see that it's more negative as you go out in time, and it gets a little less negative as you move towards expiration. But but I think our lack of interest, it's not necessarily a lack of interest, it's just it's more explainable. So instead of like a 0 point being normal, right, where it was the calls and the puts are the same volatility, I think we probably need to start looking at what the normal premium the puts are over the calls in general to see we can start looking at the difference from that kind of normal negative number as opposed to 0.
Yeah, that's a good point, too, when you're talking equity and index skew, which is typically lumped together as investment skew. Puts have the premium, calls have the discount from a volatility perspective. There isn't a lot of change to that net shape. You very rarely going to see the calls over. That said, there is a lot of nuance within the skew. That's why we see stuff like, skew indexes and other things quoted out there all the time, because the puts will decrease, the calls will increase, and vice versa. So you will see various levels of it, and people will measure the intensity and how expensive the puts are. Is certainly a very oft-quoted and oft-tested type of index out there, so you can see that for yourself. So that's important. That's an important level people look at. But you're right. Compared to the crazy vacillations we see in gold or in WTI or some of the other products talked about here a lot, it's much more of a plain vanilla type thing. The puts are always rich, the calls are always cheap. Not a heck of a lot to really to do beyond that, except for the minor nuances and fluctuations. Where if you want that, you hit up our volatility view show and stuff like that, and we're happy to dive into that on a more deep level. Speaking of vol views, we have a question here from JJK. He writes, can you hit on VIX futures and options? And the answer is no for this program, but yes for vol views. We just did vol views a couple hours ago, so hopefully you caught it. If not, it comes out on Monday morning, so you guys check out and all the activity for the week from a volatility perspective. You can stream it live, noon Central, 1 p.m. Eastern. And that's the show where we do all that stuff. So we don't really do the VIX stuff on here. I don't know, Nick, you mostly work with CME. You don't even have the VIX stuff on the platform, correct?
I had the VIX for a while, and in fact, I just decayed it officially. I decayed it officially a couple of months ago, but I just decayed it officially publicly recently because I had some people that were interested, but they actually charge quite. We can go back to the market data conversation we have almost every time. It's actually really expensive for just that stuff, and then you get charged on a per user basis. So even for a delayed information standpoint, so economically, it's not really worth it unless you get people who are really interested to take a look. It was cool while we had it. We did some good stuff. We had the term structures there. We started to incorporate the weekly options, but we just made a business decision that we were going to kind of shy away from that stuff.
I can certainly understand that one. Let's wrap it up with a silly one here, Nick. This is from this was actually sent in one of our other shows, and we kind of laughed about it there, but I think it belongs here, actually. This is from 777. He, or perhaps she, writes, are you aware of any specific gold arb between Chinese gold derivatives and their U.S. equivalents? So he could be talking COMEX, he could be talking gold, he could be talking GLD. I don't know. I'm not an expert on the Chinese metal derivatives. I'm guessing, Nick, this is not in your bailiwick either, but it's kind of a ridiculous one, a fun one to end on. What do you have to say here for our friend, Mr. or perhaps Mrs. 777? He wants to know the secret sauce between the, or behind, I should say, the Chinese/U.S. gold arb. Have at it, sir.
Yeah, it's funny. Every week I see that in the notes, and I'm always afraid you're going to ask that question because I have absolutely no idea how anybody would ever answer that question. I don't think anyone does. So we have the same laugh that you had on the other show. That's if anybody knew the secret to that arb, I'm sure that somebody would be taking advantage of that arb. But I don't know. Is there a separate contract that they trade out there? They trade their own gold contract? I don't even know. Does they have a Chinese gold contract? I
don't even know that either. I was just kind of digging that up as you were talking to see if that does exist, because I'm not sure exactly what specifically he's referring to. It may just. Yeah. I mean, I know they sling a lot of gold over there too, and a lot of metals. I'm assuming they use a lot of the same products, unless they have their own listing out of there. I don't know. But yeah, if it's just gold across the board, then the arb's pretty straightforward. It's the same product.
Yeah, I don't know that one. I'm glad that one's off the books now, so I don't have to sweat actually seeing that one on the notes, because I always going to have mic problems when you ask that question. So I'm glad I don't have to do that anymore.
All right, let's save you from your mic problems, Nick. And instead, I think it's been a fun one. I think it's time to bring this one, unfortunately, though, to a close. But we can't do that until the funk is back. There it is. That's a great way to end out our broadcast week. I can just listen to this song over and over again on loop. Sometimes I even do. You never know what's going on here in the studio when we're not broadcasting or recording here in the show. It's been a fun week on TWIFO, a fun week on the network, Nick. We're winding it down. It's been good stuff. You, of course, if you missed the live version, you can always, or you tune in late, you can always check out the on-demand version. iTunes, TuneIn, Stitcher, Google Play, all that good stuff. Our app all on bright and early Monday morning, so you get all that goodness. We don't bother you over the weekend, but bright and early Monday. And, of course, you can always tune in live Friday, 3 p.m. Central, 4 p.m. Eastern to hear me and Nick and some guests every now and then. Probably get some more on there just for fun for you guys, breaking down all the fun action in the world of futures options. But Nick, as we were alluding to here in the show before we go, you're always cooking up some cool new stuff over there. In fact, I get to be one of the fun things I like about this show is I get to play with it all first, all the cool new features you're adding. So I kind of get to be a little bit of the beta tester there, which is fun. But Nick, what do you got cooking up for our listeners this week over there in Quick Strike land?
Well, I made a couple notes as I was seeing some of the things on Twitter pass by as I was retweeting the notes that you were putting out. Just to, again, to reiterate, go over to CME Group site, search for Quick Strike, QUIKSTRIKE, take a look at all the tools that are out there. The one thing I wanted to make mention, I haven't really talked too much about it on the show, is there every Friday about the time we start doing the show, we refresh our CFTC Commitment to Traders report. So we have a pretty comprehensive report out there for not only the CME Group products, but for the other exchange. It's softs and energy products as well, because you can't really find that stuff anywhere on the other exchange. So take a look and try to see what you think of that. And I know a lot of people use that COT report, and it is out there in good form and fashion on the CME Group website. The other thing is we have been working diligently to produce market heat maps. So you will be seeing those come out in the near term, both on the free version and on the, well, probably out there in the free version. What you're going to find, too, and I like saying this because I think it's important, we're going to end up giving away a lot more stuff that we probably could get people to pay for, but it's going to just be free. It's going to be free on the CME Group website, and it'll be that free in one form or another, and there'll be maybe some advanced versions that are available in the paid versions. But most of the stuff is just going to be better ways to look at the data that's already out there. So the heat maps are pretty cool. I mean, if I was at my desk, I would tweet one out right now, but you're going to see open interest stuff, volume stuff, change in open interest, volatility things, skews. It's going to be fun. And even benchmark heat maps as well, so you can see what vol's doing across categories of products, that type of stuff. So look for those things. And I'll tell you, I say, look, keep an eye out for them. It is August. It is the summertime, so we may or may not release in the next week or so. But, when we start to roll into the fourth quarter, I think you're going to see a lot of that good stuff come out.
All right. Thank you for that, sir. I'm glad we can make a whole show from your undisclosed location. We'll have to get you into the mothership here in the studios next week, so we can do it without fear of reprisal from the authorities, and you can enjoy your frosty beverage in a much more secure and disclosed location. And of course, listeners, if you want to try all that cool stuff, they really are putting out a lot of cool bells and whistles that they probably could be charging you guys for, but they're putting them out there for free. Against my recommendation, I say charge them the heck out of them, but Nick's giving it to you for free. Go find it over there, cmegroup.com/TWIO. This week in options, leave off the F for fun, and then you can find it there for yourself. And on behalf of Nick and indeed myself, I want to thank all of you out there in our listening audience, downloading, streaming, subscribing, listening live, all that fun stuff, and we'll see you next week right here on TWIFO.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. TWIFO.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.